Oh, numbers are jumping up quickly. Good morning, everyone. Happy Wednesday to you. Good morning, Lori. How are you?
I'm doing great, Lauren. And you know what? I am so happy to see the numbers jumping in the middle of the summer when people want to be to the beach and everything with their kids and they're tuning into the show. Much gratitude. Thank you to everybody who's here today live to visit with us during another awesome show. Well, we say that all the time, don't we?
We do, but you know what? It's kind of true. So
I
we're
know.
only stating facts.
And I tell you, I get nervous. I'm like, oh my God, I've been performing for over a year. Can I keep pulling it off? Meaning, i.e., not me, can I get the good guest? I just sit here and ask a few questions. It's the guest that makes the show. Lauren brings it all together and does the behind the scene. The guest makes the show. I just think of really cool questions. That's all I do. And good morning, Christine. We got a hello in the chat this morning. So good to hear you out there. So, Lauren, take it away. Let's get started because we got so much to discuss on today's show.
Oh, yeah, that's why I went ahead and pulled up these slides because
Perfect.
today's going to be a good one. But you guys will find that out very shortly. So good morning, everyone. My name is Lauren Simpson. I am with the SBDC, or the Small Business Development Center. We're a national program with over 1,000 locations across the country, and we offer no-cost services to local small businesses. Now, our services are at no cost to you because your tax dollars have already taken care of our fees. So for the Los Angeles Regional Network, we serve the Los Angeles, Santa Barbara, and Ventura counties. And if you look at those red waymarks on the map in front of you, you will see that those are our physical locations. And so you're able to actually work with one of those center locations, depending upon, of course, where your business is located. You will see that we are in Camarillo and Santa Clarita, over to Pasadena, all the way out to Laverne, throughout Los Angeles, the South Bay, as well as down into Long Beach. Okay, so you remember that little thing about tax dollars taking care of any fees, all of our resources being free. Here's a deeper dive into what it is that we offer to you for free. So we offer no cost business advising. And so you're able to sit one-on-one with one of our business experts. And I am talking about experts in various fields, from marketing to if you're just starting out, to creating a business plan. If you are looking to get a hold of your numbers, you might have a chance to sit with our guru of all numbers, Miss Lori Williams. If you are, let's say you're a handyman and you're looking to go into construction, we have someone specifically for you. And then let's say that you've been in business and you're looking for more capital. We have a team, a very specialized team. It's called the ACT team. And so they can assist you with access to capital. So again, that's the no cost business advising side. And then when it comes to the virtual trainings, we offer comprehensive workshops that assist your business in beginning, adapting, and growing. Now, I'm sure you're all intrigued, so be sure to get in contact with us today. You can reach us by phone, 866-588-7232, or online, smallbizla.org/new client. Now, if you've reached us and you are outside of the Los Angeles, Santa Barbara, or Ventura counties, please go to americassbdc.org/find your SBDC. Or I'm going to do a quick stop my screen share, and then housekeeping. Please, let's put all questions into the Q&A. Again, questions into the Q&A. Let's make sure that they're relevant to the topic at hand, please. And then check the chat for any links or comments or resources we'd like to provide for you. And then join in the party. We have a great guest on today, and Lori always has some really fun content for us. So go ahead and jump in, and we'd love to hear from you. With that, Lori, I'm going to kick it over to you.
Okay, thank you, Lauren. And two things. One, thank you for mentioning the access to capital team, because we're going to have a guest coming up that's going to come on from that team. And Lauren, another thing that we never talked about, and that is in the LA area, the advisors are all independent contractors, meaning these are not government employees that have been through the government their whole time. These are people that have their own company, most of them, or work as freelancers in some capacity. So whatever their expertise, they're actually working in the field, which takes a whole level of knowledge. And of course, we get paid by the government contract. So we're not here, saying, hey, I know a little bit of knowledge. I really don't have any experience. I'm doing it for free because I have nothing else to do on Friday. The government is our client and we have our own businesses, and that's where the information comes from. So I think that's kind of an interesting thing to note because it gives you the level of expertise with the individuals that are involved. So I know we never kind of brought that up, Lauren. I thought I would mention that this morning. Okay, so let's get into a couple things. I've been doing my myth buster. Now, I'm going to say, first of all, what I'm going to speak about today is that it's a big topic and I could go on and on. So in a way, I'm doing a little bit of rambling. Maybe I always do rambling, but I'm going to do a little rambling. And this is something that I've spoken to people before, but it came up on a topic on a call yesterday. I'm always bringing up the things I'm experiencing on my calls. And after I had the conversation, I thought, I'm going to at least bridge this subject on Small Biz Talk, and I might come back in a couple weeks with a little kind of small little financial model to explain what I'm talking about. Okay, so let me ramble. Growth and scalability, making it a conscious choice. Right there in the words I've written kind of creates a curiosity. What am I talking about? I had a client yesterday, which is not unique, talking about the need to grow the business and make it scalable. And then they asked the question, well, what is scalability exactly? Which is a great question. And when it comes to company growth, I talk about this a lot. We as entrepreneurs are fed to believe that growth and scalability is something that must happen, like it's the ultimate goal and it's every company wants to achieve this. Do you know, I'm always telling you guys things that are completely contrary to what you're hearing all the time. I'm here to say that growth and scalability is a conscious choice, and in many ways, it's not something that you desire. And what I mean specifically, when we look at scalability, we're looking at the ability, like say I sell a product and I have only so much investment capital to sell a quantity of product that is going to give me the money I need. Say I'm selling gumballs. I can't sell just 5 gumballs. I need to sell maybe 1 million gumballs, right? So I might create the gumball, but I need the capital to buy more inventory for the gumballs and to get my gumballs marketed all throughout the world. So I may just have to have a certain scalability just to make enough money selling my gumballs, okay? Now in that, I can find an investor when I get the gumballs to a certain point of being demanded in the marketplace because they want to invest in just inventory and marketing, anything to take what I've already put the effort forth and grow it from there. So I may have to be scalable. Now, me as a consultant, I don't have to be scalable. I could create a consulting company, which at one time I had this structure. I could have all these consultants working underneath me. But the minute I do, I got to then grow the business to a certain revenue to pay for all the consultants to then pay for me. Now, numbers aside, this is just a made up number to explain something. I could either have a company that has revenue of 1 million, pays out all the consultants, the marketing, the HR, all those expenses to have that, and then I could make 100,000, or I could bill maybe 101,000 or 1,100 to pay for my overhead expenses of a computer and make 100,000. So what I'm saying is it's a conscious choice. At one point in time, I thought, well, I want to have this company because that's what you're supposed to do. And I was like, I don't want the headaches of all these people. I would rather have it me. So when you are growing, it's also an aspect where an additional growth is going to require more cost. It's going to require hiring somebody, maybe more offices. And there is a revenue that you've got to get to just to get back to the profit margin that you were at before you grew. And then you have to extend beyond that revenue to get where you're more profitable. That growth paid off in profitability. Net profit, the money you are taking for your life is what is important in these companies, unless you're just doing it because I love to, but I got plenty of money, right? So there comes a point where you can look at this financially and say, if I grow anymore, the cost for me to grow and to get to this next side of the cliff is such a big jump. I think I'll just either raise my prices or only work with these clients. Because at the end of the day, it's about a life we want to live, and it doesn't require growth or scalability a lot of times to achieve our lifestyle goal and our financial goals. A lot of times we grow ourselves into lack of profit. We grow ourselves without knowing what we're doing, and we grow ourselves into the fact where, and many of you seen it, and I'll end on this, the employees of your company make more money than you do. I see this time and time again. And all this, by the way, can be identified into a financial model so you know the outcome. Today, it was just to introduce a concept that growth and scalability is not necessarily the end goal. It's a conscious choice. It can be financially identified. And if it's not, you could go down a road where you're just more tired and more broke. Okay, now coming with my upcoming sessions, my August series and the financial literacy series will begin again in August. And once again, this is a great series. People are loving it. Session 2 and 3, I go through managerial accounting, where I talk a little bit about what I just said about growth and sustainability. My what is the best legal structure for my company and the tax advantages, I'm bringing that back again in August. Very, very important for you to take if you believe a sole prop and an LLC are taxed differently, which is another one of those myths that come up quite a bit. Okay, upcoming shows. Guys, I'm all over the place. I got some really cool things coming up. So next week, we got Dr. Sunil Dehan. And I'm just going to give you a little bit of a brief introduction. He is a metabolic health and natural medicine MD doctor. What I found interesting about something I had seen online is he is promoting the choices to make to help you to have the best energy and vitality within your own body to be able to achieve your goals, such as starting a company. I saw his academy he's now offering online where he talks about this. And I thought it was so fascinating because we've had people on the show that talked about relationships with money, the entrepreneurial mindset. And, you know, if you don't feel good physically, if you feel tired, if you feel drained, you're not going to achieve your goals no matter what. And he talks about getting away from the medical establishment, taking control of your body, learning natural medicine. It's fascinating. And I reached out to him, guys, on a limb, and he is coming on the show. So I'm pretty excited about that. Now, Lauren mentioned the Access to Capital team. Ed Anderson is one of our own on that team, and I've asked him to come on to talk about what to do to prepare your company if you do feel like you need to get finance. And we got Kevin Lee Wellington. He owns Fluffy Snowballs, and he's going to tell us all about his entrepreneurial journey and what he went through to start the company, manage the company, maintain the company. Fascinating story, guys. And then I got Simara coming back on. She is our wonderful resident HR expert. AB5, all of these tricky things are still out in the HR world, and I'm going to ask her to come on and talk about AB5. Are there any workarounds? Can you hire an independent contractor anymore? And any other aspects of HR that are coming up. Okay, guys, as you can see, got some pretty cool things coming up. But today, I have one of our, I'm going to call her our regulars, somebody that I always love having coming back on the show. One of the things is just her vitality and her excitement. I love talking with her, but the topic is so important. So Clarissa Wilson is the owner of Nerdy Number Lovers LLC, which I love that. Okay, I love that title. Nerdy Number Lovers is an accounting firm that works with small online businesses to make accounting and bookkeeping as easy as possible. I know you guys are like, oh yeah, I would love to know about that. So I'm going to just introduce Clarissa right away and have her come on the show and let her fill in the blanks. Thank you so much. I think, is this the third time you've been on the show? I thought so. I was so happy when I had you on first, and then we got so many great reviews. I was like, okay, she's got to come on again. And now I'm just like, okay, you're just going to come on as a regular guest. But we are very fortunate to have many new people in the audience. So what I'd like to do is, can you give us a little bit the background of you, and as well as what does your company do and the type of services you offer? Let's start there.
Okay. Yeah, I'm really happy to be here. I love coming on here and talking with you guys. It's just so much fun to have these conversations. So I am an accountant. I have 3 degrees in accounting, a bachelor's and 2 masters. Both masters have a concentration in forensic accounting, which is fraud. I also spent 6 years as a government tax auditor with sales tax as my specialty. And then I left being a government auditor because I honestly hate how the government treats small businesses, where I can now help you guys prepare more before the government knocks on your door with what I do to help make the accounting and the bookkeeping as easy as possible.
I'm going to add, this the first time we're on, how I became aware of Clarissa is through an SBDC client. I had, long story short, but I told the client, you got to get rid of these accounting bookkeeping people you have. They don't know what they're doing. The things, the finances were a nightmare, right? So all of a sudden she said, okay, I found somebody new. And then I had the opportunity to speak to Clarissa on a joint call. But before I did, I looked at the financial statements and I was like, well, this is very interesting because these are correct. They're not only correct, but they're properly detailed out. I only seen that kind of high level work within the bigger firms. So I was like, whoa, that's kind of weird. She knows what she's doing. Could this be so? And then I had a conversation. I was like, she knows her stuff. And then I realized with her connection to small businesses and being able to speak, you had to come on the show. So that's a little bit of my background on how I, got with Clarissa to come on the show. So we're always talking about different things. And I kind of set out a goal of 3 to 4 topics we're going to discuss. But they're not really connected together perfectly, but they all are connected in the fact that we're going to talk about in relationship to QuickBooks, okay? So we're going to talk about, I'm going to give you the first 2. We're going to go through 2 different pathways, Clarissa. We're going to look at, okay, I'm going to do it myself, right? So what do I need to make sure that it's accurate and what are we seeing? And then we're going to say, I need to hire somebody. What do I need to do when I'm interviewing? Notice I said interviewing. You don't choose just the first person you meet. What do I need to look for when I hire somebody? Let's take the look for when we hire somebody first, okay? So I have this statement and I'm going to make this statement and you're going to explain it. Today's QuickBook bookkeepers may not be anyone with a bookkeeping or accounting background. They are simply someone who studied and learned the QuickBooks software technology. And you, the purchaser of their services, unknowingly are relying on them for accounting and bookkeeping answers when they really only understand the technology. I don't think the audience are even aware of what I just said. Clarissa, you just take it from there and go wherever you need to go because I know you explain this well.
And I want to add to that, the QuickBooks Live bookkeepers are usually even worse than just your technology ones, because I have a client who hired the live bookkeeping and I'm asking questions. I'm like, why? They did a whole bunch of reconciliation entries for thousands of dollars and there's no explanation just because they couldn't figure out how to reconcile the account. So I always say to stay away from those bookkeepers as well. I get that they're trying to help you get business because they make more money, but they're just as bad as those technology ones where they just know the software because they took the course that QuickBooks has to teach you how to do it. I've never taken that course, but somehow I'm pro advisor.
Yeah, and you know what? I got to confirm what you're saying. I was actually through a joint call with a client on the phone, and they told me something that broke accounting rules. And I just said to them, please check with your supervisor because you are correct. You have eliminated some of the basic accounting rules. And they came back and said, okay, that's not correct. So I absolutely agree with you on that. So please continue. Didn't want to interrupt, but I wanted to say, oh yeah, I've had that same experience.
Yep. So the biggest thing with the ones that are just this technology where they've only learned how to do the bookkeeping through using something like QuickBooks by taking their course, they don't have any of the accounting knowledge. Or say they take a course called, there's something like Bookkeepers Live or whatever it is. They take that course, they learn how to do bookkeeping, but they still don't have the accounting knowledge. So when you get an accountant in there, and they look at it, like Lori mentioned for the client where we originally met, I knew what I was doing, but the accountant that was working with her before I got in there, everything was a complete mess. Like there were, trying to think, like there were 5 different software accounts, I want to say. So like, why do you have so many different software accounts? Why isn't everything all under one? I understand when you want to understand where certain costs are coming from, but your profit and loss and your balance sheet should be pretty simple. Yes, from YouTube University, I get that.
Yeah, and Clarissa, on that, and we're not mentioning any names, but one of the things that clued me in that I told her, you've got to get another accountant, and I couldn't believe this. They were wanting to charge her more to purchase a technology solution to check the accuracy of QuickBooks. So they're downloading the QuickBooks without checking it, and then they want to take a technology solution to test it, and they said they can't have a person, it's too expensive. And this brings in, and I brought this up because people are purchasing QuickBooks and accountants, I'm going to go accountants and CPAs and EAs based on price, and I tell people this is not a place that you try to skimp and save.
Right, but the problem with that software that they used, a person still had to check the boxes to make sure that it was accurate. Because I had to go back through and delete all of that information because they were double reporting the income, basically.
Yep. So if I was to interview several people, notice I said several people because I want to bring them on as a bookkeeper, what kind of questions can I ask to dig out? Can I just say their processes and background? What could I ask? How can I be more informed as a purchaser?
One of the first questions you want to ask is, what is your education around bookkeeping and accounting? What kind of education do you have? Another question is, how well do you answer questions and take feedback? I've gotten quite a few clients lately where like they were never allowed to ask questions before.
I have too. Yep, I have too. Or when they answered them, if I can just use this expression, the clients felt like they made them feel stupid. And so they didn't ask again. And I always say this, the measure of your intelligence is being able to make complicated things simple in your explanation. Hence my company, Business Simply Put, that's where I got the name from. And so a lot of them, what they do is they make them feel so inferior and then they just stop asking the questions.
Yep. I get that a lot. You're afraid to ask any accountant a question because somebody before made you feel inferior or that you were asking the wrong question.
Yep. And at this point, Clarissa, we got to bring people back to remember that at the end of the day, you are ultimately responsible for the numbers of your finances on your tax returns. And that's what people don't realize is that they give their power. I'm going to say the word power. They give their power away to these professionals. And I'm not saying don't use the professionals, but I'm saying stay in control to have somewhat of an understanding if the data and the information is correct, because the IRS is coming back after your butt, not theirs.
Correct. The only way the IRS will come back after them is if they have fraudulently filed your return and they signed it, and they will go after other clients as well from that same accountant.
Yep, exactly. Because as an EA, we have to. In fact, it's so funny. I have to make this side note. When I was studying for my EA exams, which made me realize that none of this is black and white. I thought when I got to that level of tax information, suddenly things were going to be black and white. No, they're gray. Well, they had this part in it. I know I shouldn't say this live, but I'm going to. So they had this part on the test that said, and here was the line, EAs are not allowed to engage in audit lottery. So I'm not allowed to say to a client, well, yeah, you could do this, but you probably won't get audited and everything. And they called it audit lottery. And I had to laugh. I go, audit lottery to the IRS, you're not allowed to engage, but to many professionals, that's a skill that's quite marketable, predicting your chances of getting audited. So I thought that was so funny, though, that the IRS has a sense of humor that they use the term audit lottery. Okay, so I asked the bookkeeper, I asked the accountant, I asked whoever, I say, what's your education? Can I also dig deep into how they are doing the files? In other words, which we're going to get into in the DIY for a second, are they actually looking at the categories and choosing and checking, or are they just pushing the little magic sync button? And are they not even checking? Because Clarissa, we're going to talk about that on the DIY, but I'm even seeing the professionals you're paying for hitting the sync button and not checking. Can you tell our audience what in the world Lori's talking about right now?
So when you're in QuickBooks, let's just use QuickBooks, it will sync your bank account into QuickBooks so that every single transaction where you spent money or made money and it came through your bank account will show up in this feed in QuickBooks. You have to go through each individual transaction and put it into the correct account, whether it's an expense, an income, balance sheet account, wherever it goes. You have to put it into that correct account. QuickBooks will suggest what account they think it should go in. And they are not always right. Sometimes they're right. You can set rules and it will still not always take the rule that you're setting. Because I have one client, for some reason, when they make money on Amazon, it continues to make it go directly to the bank account. That's the suggestion from QuickBooks. So those suggestions aren't always right. But what Lori's saying is a lot of people will just hit add with whatever those suggestions are. A lot of them will say uncategorized expense, uncategorized revenue, uncategorized asset. I honestly hate those uncategorized accounts.
Along with ask my accountant.
Yes.
Oh my God. You know, these are not places you're supposed to file things. And going back to what you just said a minute ago, and I'm assuming that I understood it correctly. So if I make this point to the audience and I'm wrong, correct me, Clarissa. So if that's taking the money that was from an Amazon sale and putting it directly in the bank account, it was not accounting it under revenue. Therefore, it was not being reported on your taxes. And that's a big, bad, nasty thing that can come back and haunt you. And that's why I'm saying that this stuff needs to be monitored, because the repercussion is an underreporting of revenue on your taxes, which
Yes.
they can track back. You got this Amazon W-2, not W-2, but 1099, money you got. And suddenly, where's all the revenue you made? Oh, it didn't get reported on my QuickBooks. And that, I just wanted to, you made such an excellent point. I wanted to make sure I tied it down for everybody. Was I correct on what I just said? Okay.
You were correct. And I will add, underreporting your income is the #1 reason you will get audited.
Yes, it will. And that's one of those things, and we were talking about prior to the show, certain things it's easier, let me just say it's easier for the government to catch because there's papers that are out there that coincide. And when there's papers out there that, 1099s, that's the whole purpose of a 1099, for the government to have, heads up, Lori made some money. Is it on her taxes? That's the purpose of them. And so when you have a paper out there that says you made this, and then you put another paper, the tax return, that says you made that, the computers, the computers out there can link that up, and that's an easy audit opportunity. And then they start digging at everything.
Yep.
And can you say, well, my QuickBooks was wrong, so I'm not at fault? No.
Nope. Nope,
Nope,
you can't say that at all.
Nope, not at all. So when we look at our thinking, it's not that, I'm going to say it and then you'll say it more proper. It's not that we can't download the data. We could take advantage of not having to retype. That's a good advantage. But it's that we can't let the computer system determine where to put it. We got to go through that window. I think it says the word add, right? And you check it and you select add. Am I correct on that? Because I saw QuickBooks Online the other day. I'm the expert at desktop. She's the expert on online. So that's why am I reading that correct? So if we direct people to the actual window we're talking about, that's the window, right?
Yep, that is correct. It'll say add or it'll say match, because sometimes you're matching it to whether it's another transaction you already put in or transaction from another account or that type of thing.
Got it. So really, and this kind of starts us down a road of DIY. Do it yourself, which I'm not against at all, guys, you doing your own QuickBooks. In fact, I'm for it in many ways. If you take the responsibility to make sure the data is accurate, okay? Because at the end of the day, that's what we're talking about. It has to be accurate, right? So if you're going to do it yourself, at least have an understanding of what you're looking for and what you're doing. And I'm going to say it this way and then pass it to you. And using some of the, I'm going to call it this, the built-in mechanisms that check your accuracy, such as reconciliation. Now, I say reconciliation, and a lot of people who do their own QuickBooks go, huh? What's that? Clarissa, can we fill in these blanks and take it from wherever you want from what I just said?
Yep. So I'll start with where to find the reconciliation, because it's usually not easy for some reason in QuickBooks. So if you're in QuickBooks, you want to go to down to accounting, and then you get another another box that will say reconciliation in there. So that's how you get to that. It's not easy to find. And then you would just select the account you're trying to reconcile, and you would put in the ending bank balance and the date for that ending bank balance and start reconciling. If your QuickBooks is up to date and you don't have a whole ton of extra transactions in there, and you don't go through and exclude certain things, most of the time your reconciliation will be pretty simple in QuickBooks. I know for most of my clients, because I do it, that's how it is. It takes 10 to 15 seconds to do a reconciliation most of the time, because everything is correct. If it is not, then you have to uncheck everything that QuickBooks automatically checks and get the bank statement and literally go through line by line, which is what a normal reconciliation is. But QuickBooks helps you with that because you're bringing your bank feed in, so it knows what went through the bank anyway. So it helps you try to make that process a little bit easier. However, a lot of people will put journal entries in. They'll put extra entries in that didn't actually go through the bank account, but they went through other accounts, but somehow this entry shows up that it's going through the bank account. So now it's showing up on your list in your reconciliation of what you need to go through, and it's going to throw things off. Or you're going to have transactions where, say you have a credit card and your bank. The credit card payment goes to the bank, but you didn't match that payment. So now you have two of these credit card payments on the bank side, and only one of them is accurate.
I
So you have
see
to
that a lot.
delete.
It ends up with two, it double dips. I see on the online, when I look at the balance sheet, their credit card is all messed up because of, I think, what you're speaking of. So
Yeah.
when you can't just like pay your credit card and call it a day. You've got to do something else in QuickBooks, is what you're saying, correct?
Correct. So you have the credit card account, you have the bank account. When you pick one of them, it doesn't matter which one, you're going to mark one of them as the credit card payment. In the other account, you should have a match button for that payment so that it's not putting the payment in for both account twice.
Okay, gotcha. Now, I also see a problem, and I think, because I only seen a few, not the number that you have, with people where they're just withdrawing some money to pay for themselves, whatever kind of company it's structured is. I'm not talking about a W-2, right? An LLC, a sole prop. And they seem to get into some problems when they try to take money out for themselves. It gets kind of messed up somehow. I don't know what's happening behind the scenes, Clarissa. I see it on the balance sheet. I can tell what's going on.
Usually they're not putting it into the correct equity account. So that's usually what it is. Like other things where you're talking about, they will pay a business credit card with their personal account.
Mm-hmm.
And then when you're in QuickBooks, you're putting it into the business bank account. So instead of that payment going to the business bank account, it should go to owner's equity.
Gotcha. I'm going to kind of go a little bit of a veer here, because I wanted to make sure that we talked a lot about it before we ended, your products and your different things you sell, as well as your experiences. But I got a quick question, Clarissa, and it may be yes or no. So please, I'm putting you on the spot asking this in a way. Say I'm a DIYer and I'm watching this show and I'm like, I think mine might be wrong, might be right. Can they buy just a customized hour of training on something for you if they want to remain a DIY, but they want you to teach them a little aspect? Can they customize some purchases from you? Can I ask that?
Yes, they can. They would just have to email me for that because I
Okay.
don't have that specifically available.
I didn't think
It
you
is,
did, but
but it's
you
not.
yeah, I thought you wouldn't mind selling an hour here or there. And that's why I didn't mean to put you on the spot, but I could see people on this call going, I think I'm doing it wrong. Is there a way I can get right information? And I don't like to tell people they're doing something wrong without giving them a accurate and correct resource to go to. So that's why I immediately was like, okay, can Clarissa help these people out if I just opened up Pandora's box for them? So there you go, guys. And Lauren's putting Clarissa's information into the chat so you know how to get in touch with her if you want her to just watch your back a little bit to make sure you're taught correctly. That's what's really, really important. And here we got a question that came up from Christine, and it's on the distribution. So I'm going to go ahead and read it out loud to our audience. Here's it. Let's address this. I was told to call all money I took from the business as partner distribution, and any money that I added to the business from personal accounts as partner contribution. Is this correct? We need to talk about terminology and how that is really a terminology specific to their possible business model, or the accountant just gave them that terminology. So I think this is a beautiful time to talk about what is the main terminology of those accounts that can be used across all business structures versus a specific terminology that they've been told. Are you comfortable taking that, Clarissa?
Sure. So for that question specifically, you can use those account names, or you can literally just use owner's equity, or you can use owner's draw and owner's contribution. Doesn't have to be the word partner, but it can be if that's what you want. So whenever you, as the business owner, take money out or put money in, it is considered owner's equity, which is partner distribution, partner contribution, owner's draw, that type of thing.
Perfect. And then, like a lot of times, as long as you get the correct transactions of money out versus money in, and you call it something similar to that, the account, I'm talking about the CPA, the EA, the tax preparer, they should be able to pick up on what those are. Okay, so from a DIY perspective, what I'm going to say, what I really, I'm going to put it in my thoughts, and you correct me or add to it, Clarissa, but I think if there's just two things that I could do that's going to enhance the chances of it being accurate, is not allow QuickBooks to categorize, do the add and match one by one, and monthly, every month, because it's so hard to go back, do the reconciliation. I feel like that's going to take a giant leap towards the accuracy. So I'm going to get you to comment on that, and then I'm going to bring up this wonderful telltale. Okay, this is a funny way to say it. This telltale called the balance sheet. Most people don't even look at the balance sheet. I always tell people I want to see the balance sheet first, because I can't say if it's correct, but I can say if it's possibly incorrect. Why am I stating that? Why should people look at their balance sheet? What do they look for? With that one, Clarissa?
Yep. I just lost my entire train of thought. What was the beginning again?
The balance sheet, why it's the telltale. I went on and on. What to look for, why to look at it, what you can look at that can immediately give you an indication, what you might see on it, that can immediately give you an indication as, oh my God, things aren't correct.
Okay, so anything, when you're looking at the balance sheet, if you see any number that is negative, any number, you want to look into that more. Some can be correct being negative, but not all of them. Especially if you have a credit card, a bank account, or a tax account that is negative. I had someone yesterday who had me look at their accounts. They had $771,000 negative in a tax account. I was like, did you really overpay your taxes by $771,000? So
I've seen bank accounts that are like that. The company didn't even have that much in sales and they had negative bank accounts. And the other thing, and I forget how QuickBooks has it, I think they call it open balance equity, if I'm not mistaken, because desktop uses different terms. And that is what you use to start the company. And I see it continuously. I started the company with negative $1,000. And it's like this new world of entrepreneurship, Clarissa. All these companies get to start with negative numbers. I'm seeing it all the time. Can you talk about that?
So you can't actually start with a negative number. So if we go back to this owner's equity, if your opening balance is you putting $1,000 cash into the business, you're not putting that in opening balance. You're putting $1,000 cash into the bank account and $1,000 cash into owner's contribution. So none of those accounts should be negative because you're adding $1,000. You can't take $1,000 that the business doesn't have.
Yep, exactly. And so these are clues that something is wrong. And then I get people say all the time to me, this is the other one. Well, the balance sheet's incorrect, but the income statement's correct. And I say, that's like saying my hand's black and blue and looks like it's ready to fall off, but the rest of me is good. You know, the interconnected of these sheets. If the balance sheet's wrong, chances are the income statement could be as well. So you really have to look at the whole system when you look at these sheets. That's the point. They're all connected. So perfect.
We'll say that the balance sheet being incorrect, it can have a lot of these, what I mentioned for the double payments. So your credit card is being paid twice. So that doesn't affect the balance or the income statement. It only affects the balance sheet. And that's one thing that I'm finding a lot is you have all of these payments that are being for credit cards and loans and whatnot, they're being added twice. So it only affects the balance sheet.
Perfect.
So
Thank you.
that.
May not, but thank you for that clarification. And I think that is one of the, you probably see these consistent things that people do wrong that creates consistent problems. That's why I'm wanting to bring it up. So I'm inviting everybody after this, if you do use QuickBooks, go to your accounts. If you got a balance sheet, run it and take a look at it. And I guess before we leave this, I like to say from a tax perspective, the IRS, even though QuickBooks would like you to think differently, there's no written words in the IRS book that says, thou must use QuickBooks, okay? Because they would love for you to do that. I have, and I know we talked about this last time, Clarissa, when I have SBDC clients come to me and they only have a few transactions, even if they're having a lot of transactions, but it's only a POS deposited, I just have them use an Excel document that I customize with the different tabs because to me, it's static. They can look at it. They can see the numbers. They can afford it. They can keep it. It gives them past record. So I also like to separate this concept that people say, well, what they say is, I got an idea. I need to form an LLC and get QuickBooks. And I'm like, no, you can operate as a sole prop for a good amount of time, if not indefinite, and you could do an Excel document. So comments, not the LLC portion, but the fact is we don't always have to use a software program, do we? Like QuickBooks would like us to think.
No, you don't. And that's why my bookkeeping toolkit, I have that spreadsheet created already because you want a spreadsheet that was created by an accountant, not someone who's like, oh, these are the numbers that I track in my business. So I'm going to sell this spreadsheet because it'll help you track those same numbers. But most of the time you are missing at least one thing that is super important for filing your taxes. So if you're not tracking that number, then you're going to miss something.
That is so true. And some of them just create these long logs or it's really convoluted. And, having, and like Clarissa says, knowing the accounting of it, you create an Excel document that matches the accounting process. So as we're leaving that, I just want to say you can go to Clarissa's website, her toolkit's on there. You can check out some of the other really cool products that she's created. And they're wonderful. They're actually wonderful. And we're going to come back to using your numbers in a way other than your tax return. But before I go there, I just want to spend a millisecond on something that you and I were also talking about, because as you know from the beginning, Clarissa also was a sales tax auditor, okay? And many people and I have a webinar on should you be charging your sales tax that I do every month or so. And I created this webinar because people are not aware of economic nexus at all. They have no understanding of what it is, what it means, and this has to do with charging sales tax out of state. So I am going to let you take it from there, Clarissa, because I'm always lecturing on this. I want the people to hear another person, because I am getting so many scary things I'm seeing, especially with Shopify, where they're collecting the tax unknowingly, putting in their bank account and not remitting it. Can you talk to the audience about this from an auditor perspective?
Yep. So no matter whatever state you live in, that is your home state, and you do not have to cross any thresholds with sales, maybe $1 to sell $1 in your home state, and you are responsible for collecting and remitting sales tax, meaning you have to register for a sales tax license in that state. There are 5 states that have 0% sales tax, so you don't have to register for those states, and you don't have to worry about the economic threshold. What the economic threshold is say you live in the state of California and you're selling all across the country for a physical product that is taxable in every state. Well, minus the 5 that have 0%. And then into, let's say, the state of Texas, you have crossed the economic threshold. I believe off the top of my head, the state of Texas is $100,000 in 1 year. So okay. We're now into the end of July. So say from January 1st of this year till sometime earlier this month, you cross that $100,000 threshold in Texas. So as of August 1st, you would have to register a sales tax license and start collecting and remitting sales tax in the state of Texas as well. Not every state has the same threshold, but the majority of them is $100,000. So once you sell into that state, that $100,000, not overall, then you have to start collecting and remitting sales tax, usually the first of the next month. So that's why I said you cross it in July. So August 1st, you would have to start collecting and remitting.
And what I always tell people is you can find out that state's ruling by going to their website. You can Google remote seller. A lot of times that's part of what the terminology that they use on their website. Like I used Nevada as an example, and they had a threshold that when you sold a certain amount, then you have to get a seller's permit and you have to collect and remit. And they also say you could do it from product number 1, or in the case that they have sales tax on products. So you don't have to worry about the threshold. Like South Dakota also does taxes on services. So if you're offering a service in their state and you meet the threshold, you would also have to have sales tax on the services there. So you can get tax on products, taxes on services. Thresholds can be quantity sold, but most of the time they're dollar amounts reached, and they are all each specific to each state, which can be a little bit of a nightmare. And you guys might remember Amazon didn't charge sales tax. Suddenly they did. It was based on, I think it was 2018 when economic nexus came into play, right? And so what is a small business to do that is suddenly selling all over and has to deal with this? And also, can I add on, Clarissa, specific to the difference of Amazon and Shopify, how can we make sure our third-party sellers are actually doing this all the way to the remittance on our behalf? I know those are big questions, but those are important things. Can we chat about that for a bit?
So Shopify, you are 100% responsible for that. Shopify does not collect and remit it for you. There are buttons on your account where you have to check the box for what state. So if you are not responsible for collecting sales tax in any other state but your own, do not check those boxes, because then you're collecting the sales tax, but you don't have a sales tax license for those states. So now you're technically committing fraud by collecting the sales tax and just putting it into your bank account and not sending it to the state. So
and by the way, I just want to add, guys, with the SBDC, I see about 5 people a month that are doing what you're saying. So this is not a one-off, only a few people are doing. They click the buttons on Shopify thinking it says collect and remit, but it's only saying the word collect. It's not saying the word remit. So they're adding it to the invoice. It's going into their bank account. So technically you're collecting sales tax without a seller's permit and keeping it. That's what you're doing. So I just wanted to add to that, Clarissa, that so people understand this is not uncommon.
No, it's not uncommon at all. And that's why I mentioned the part where uncheck those boxes if you are not responsible for collecting it in those states, because now you're collecting it and it's going to your bank account. And if you're not remitting it to the state that you're collecting it for, it's considered fraud. Because I had an audit where I did that. They sold cell phones. So they had collected sales tax, but they claimed they didn't know they had to remit it. So they had over $100,000 in sales tax over 3 years that they never sent in, but they collected it. So it went to their bank account and they owed all of that to the state once the audit was completed. They owed a lot more than 100,000, but it was 100,000 that they had collected and not sent in. So don't collect it if you don't need to, especially on Shopify. Uncheck those boxes. And like Lori said, I see it a lot too. You have those boxes checked, you're collecting tax in states that you don't need to. Going back to Miss Rhiannon's question, no, you are not responsible for collecting and remitting the tax until you cross that threshold. So once you cross that threshold, you are okay to not charge tax. And then once, so like I said, even if you cross that threshold in the middle of July, you would not be responsible until August 1st. So it's from July 16th to August 1st, you are not responsible for collecting tax then. On August 1st is when you're responsible.
Perfect. Thank you for mentioning this. You know, I tell people, and I make this statement, and it's kind of a weird statement. I have to explain it. I say, there is no such thing as a small business. And you go, wait a minute, don't you always work with small businesses? Well, what I mean, from a government regulation, there is no such thing as a small business, because small businesses are subject to things like we're talking, economic, tax, sales tax, and it's subject to HR rules. Lots of them are down to, one person being hired. And so today's small companies are affected by the same regulations that the big billion-dollar companies are. And so guys, you have to realize it's very easy to do a DIY, go through some of those companies, set up your company and legally, et cetera. So you have access to all of these things you can do easily without always having the full information about the responsibility you're taking on. And then the government comes after you and they're like coming pounding at you. Like you said at the beginning, the way the government treats the small people, they are like, we don't care if you're ignorant, you're responsible, you owe these fines and we're coming after you. And so I feel a lot of times I'm glad that there's all these resources for small companies to get incorporated and stuff. But on the same thing, I feel like it's a little bit of playing with fire. They're like kids burning their hands on the stove. They have no concept of what they're doing when they put the hand on the stove until they get that nasty government letter. So I try to get people to kind of wake up and have a consciousness, do it yourself, but have the knowledge and research what it is you have to do. I think that's so important. We got another question before we leave sales tax. See, this is always a big topic. If you do in-person shows with a TPT license in Arizona, do I then have to collect sales tax for online Arizona sales? All sales in person and online as well as possible. I don't know Arizona tax rules. I never had to look it up. So we may not be able to answer that unless you happen to know, Clarissa. Do you know?
I do. I have 2 clients where I do Arizona sales tax. So yes, you do need to still do it for online sales for Arizona if you have that Arizona sales license. So since you sell in person in the state of Arizona, you have that Arizona sales tax license. I'm guessing that you don't live in the state of Arizona, but you still do sales tax. Here's the other thing to add to this. Once you have a sales tax license in any state, whether you cross the threshold or not, you are now responsible for collecting that sales tax for that state. Because someone came to me a couple days ago and asked, they saw on an accountant's website this is an accountant, not the government, that you are required to get a sales tax license in every state before you can sell.
Oh,
That
no.
is not true.
Oh.
Do not register for a
No.
sales tax license except for your own state before you need that sales tax license, because then you are required to collect and remit the sales tax for those states.
So important. And Leslie said, can I collect sales tax to offset shipping cost as justification for collecting that tax? Leslie, my answer is, I'm not sure exactly what you're talking about, but I'm going to say no. You can't do anything that collect to justify and offset are not government words you put together. So you can't, you either have to collect sales tax and remit it, or you don't, bottom line. That's where it cuts off. Clarissa, any other comments on that?
That is correct. So if you cannot offset sales tax at all. Here's the thing. You are an agent of the state when you are collecting sales tax. You are not the one that is responsible for that sales tax unless you are not collecting it, and you should be. The buyer is always the one that pays the sales tax. You are just an agent of the state collecting it and remitting it.
Yep, those are the words from the horse's mouth. Exactly. And you can see, guys, why I like Clarissa to come on. There's very few people, to be honest, that I trust that have the accurate information and can explain it that I will bring on the show. That's why you're on 3. I can already tell you're going to be on 4. Clarissa, we only got a few minutes, but I don't want to go without talking about, beyond filling out the tax returns with your numbers, the importance of using those numbers to analyze whether you're profitable. And I want to bring in some of the tools, once again, you have in the toolkit, because I might have it wrong, so correct me, but you've got like a little CFO toolkit, I think, if I can explain it that way. And I want you to talk all about why these numbers are important and what you do to help your clients understand their numbers and use them for decision making in the company.
I don't actually have a CFO toolkit. I have a bookkeeping toolkit and then an accountant in your pocket membership.
That's what it is. Okay, sorry, I knew I had it wrong, but I knew you had something that was a resource. So take it from there. That's what I wanted to, that was what I was trying to get to. I just had the name wrong.
The accountant in your pocket membership is basically like this. On Fridays, you can ask me any question you want and I will answer it. It can be text or audio for answering it. You can ask me any question you want on Fridays for the membership. Plus there are monthly workshops. So something like this where I do a workshop just for the membership and you get all of the past ones as well. I think there's like 5 active in there right now.
Awesome. It's so, I'm going to say, comforting and refreshing to have a resource you can go to on topics that you don't understand. And I'm just saying that general in life, today we're like trying to find sometimes people who know what they're talking about. And okay, I'm showing my age right now. I'm being one of those old timers, right? Back in the day, you could pretty much know if you went to an expert, they were the real thing, right? But today you just don't know. And a lot of times if you are trusting people and you don't have the knowledge, you can end up going through a lot of different professionals getting steered down the wrong roads. I see it all the time. I do see it in the larger companies, meaning the bigger accounting firms, but not as often because they're dealing with audited and reviewed and they've got all this criteria. But in the small business world where people don't understand the titles, the names, the backgrounds, that's where I see a lot of misdirected. And what breaks my heart, Clarissa, is small companies paying good money and trusting experts only to get the wrong answer. That part just kills me when I see it, and I see it daily. And that's why I'm so adamant that when I bring somebody and I can trust them, I will introduce them to my audiences and everything, because I'm like, this is a resource you can trust. So I want to thank you again for coming back again and again. And I could tell, like, we brought up sales tax. Look at the questions and look at the understanding that we have. So I would like to make sure that I have a minute or so. Any last words, any advice, anything you want to share with us? It's all yours, Clarissa. Take it away.
Okay, well, I'll start with answering Greg's question. Yes, you can sign up for free on the California state website. I don't have it open at the moment. I think it's like CAFTA or something like that.
California Department Tax Fee Administration. Whatever I said, cdfta.com. And I can actually, while you're talking, I'm going to grab the link, Clarissa. You keep going. I got the link handy. I'll put it in the chat in a minute ago. So you keep going.
So yes, it's free to sign up for a sales tax license in the state of California. There's only a handful of states that charge you a fee. Arizona is one of them. California is not one of them. It is usually pretty quick and free. But it is the same thing as a seller's permit, yes. Okay, so a few last words. The biggest thing, make sure you know your numbers. Like, you have to know at a minimum your revenue, your operating expenses, your net profit, and your break-even point. The break-even point is where your revenue and your expenses equals 0. So you have a 0 net profit. So those are the most important numbers that you need to know. So that's what I always tell people, is make sure you at least know your numbers. And that's where the bookkeeping and the accounting comes in. Because if you know your numbers, it can make the accounting that much easier.
Absolutely. And in my financial literacy series that I do every month through the SBDC, in session 2, I go through a little Excel document they can do to figure out how much they need to sell to make $1 net profit, how many widgets, and how many widgets to make the ideal profit. And that is something that, to my utter surprise, so few know. So Clarissa, from the bottom of my heart, thank you so much for coming on. I know I'm just going to keep asking you to come on and on, because it's such a wonderful bit of information for our audience, especially on the QuickBooks online, which I don't have a familiarity with it. So Lauren, I'm going to invite you back in here to close us. Wasn't that amazing? Once again, all the information we talked, and I can tell from the chat, we have really, struck a nerve on a lot of subjects with people that they needed to know.
So much so. Look, everyone is just awesome. Thank you. Wow. Like, mind's blown, Clarissa. I'm not sure if that's what you were looking to do, but that's exactly what you succeeded in doing today.
I love being able to do that, honestly.
I'm just so I'm so appreciative of this opportunity to have Small Biz Talk. You can tell Ted I was saying that again today, but I've always wanted to be a talk show host. That was my goal since I was a kid, and made the little fake microphone and everything. But what's so neat is to be able to touch people's lives in a way. I mean, I could sit there and be a talk host on a lot of topics, but be able to communicate with people that it actually is giving them information to change their life. That's the coolest thing. So maybe Lauren, when Oprah calls, I'll have to say, Oprah, I really can't. I'm into Small Biz Talk. Go. Thank you anyway. So with that, I want to say thank you so much to our audience. Thank you for our frequent flyers and everybody with all your information in the chat, the party, and Clarissa. And Lauren, I don't thank you enough for being here and holding the show together and getting everybody's email directed and the links out to our guests. So I think we need a special shout out. Thank you to Lauren, who is always there holding us together and keeping us going. So with that, I am going to say goodbye to everybody. Thank you so much for tuning in to another episode of Small Biz Talk with your host, Lori Williams. We'll be back next week with another very interesting question about our interesting show, I should say, where we can ask questions about what to do to help our energy level from our metabolic internal health. That was hard for me to say. This is going to be a really cool topic next week. Okay, Lauren, you're going to stay behind. Everybody knows how to get in touch with Clarissa. If they don't, put it in again. If you want to get in touch with me, you want a one-on-one, anything you want from the SBDC, shoot an email to Lauren. She always makes sure they get to me, and I always respond. Thank you, everybody. I'll see you next week. Bye, Clarissa. Much love to having you on the show again. Bye-bye.
Bye, Lori. Thank you. Bye, Clarissa. You guys have a good day. All right, everyone. I put my email into the chat, so go ahead and grab that if you'd like to set a session with Miss Lori, or if you want to get in contact with Clarissa. I have Clarissa's contact information as well in the chat. But again, if you just want some quick help, go ahead and shoot me an email and I will get you what you need. Thank you so much to Maggie, Dave, Marty, to all of you. I truly enjoy working with Lori and, of course, seeing all of you. So have a wonderful Wednesday. We will see you next week. So that'll be next Wednesday at 10 a.m. for another episode of Small Biz Talk, solutions for your small business. Take care. Bye.